Good evening. This is Sid Norris from Elliott Wave Plus, and this is the January 16 of 2025 edition of our quarterly premium plan webinar, where I will go over many of the aspects associated with our flagship tier, subscriber tier, the premium plan. Before we get started, I'd like for you to be aware of my disclaimer. It's at my website, elliottwaveplus.com. To read the disclaimer in full, please go to that site, my site, and scroll to the bottom of any page there and click on this Terms of Service Disclaimer tab. There it is. Please go there and read that in full. If I were to summarize it in one sentence, it would be there's risk of loss in all trading. So Elliott Wave Plus, there it is. Please go there and check out all the aspects of it. I've recorded these webinars quarterly for several years. You can see every recording of them at my blog. So you go to resources and blog, and you go back in time through many of our blog posts. You can see there's 63 pages of blog posts going back many years there. And so you can check on earlier versions of this premium plan quarterly webinar there if you wish. This time, I think I'm going to do things a little different. Many times I'll explain all the nuts and bolts of the premium plan, but this time I've worked up a little different agenda than normal. And so what I'm going to do this time is I'm going to go back in time and show you some of the timely calls that me and everyone here at Elliott Wave Plus have made. I have two assistants here, my son Andrew and my grandson Elijah. They all assist every week in the production of subscriber materials for our subscribers at different subscription tiers. But I went back in time and I remembered several uh, excellent and timely calls that I've made. I'm going to go over those going back prior to about the middle of last year. And then I'm going to go over several recent calls. By recent, I mean these would be calls I've made in the last, over the last 6 months or so. And then I'm going to dig into our sentiment conditions screenshots that will show on weekly screenshots and on daily screenshots that our premium plan members get to see, show how to interpret those screenshots and how important those are and how they have a very strong history of letting us know when critical junctures for major turns are about to happen in the markets. Also going to look at some key ETFs and stocks. Going to look at several stocks that have been basically, there's been a rotation in recent quarters, and there's been basically some bubble type activity in several stocks. Those have had an inordinately large influence on the indices. And so in many ways, the rotation of stocks that are moving into um, bubbles type parabolic price action to the upside and look at the effect those have had on many of the stock indices. And we're going to try to narrow down the stock indices or individual stocks or the ETFs that probably are going to be the most important to look at moving forward from a standpoint of combining Elliott Wave analysis and Hurst cycle analysis, which is what I do here. We're also going to take a look at our proprietary momentum algos. Every quarter, we re-optimize and backtest those to the last 3 years of data. And we've done that, and everything is all set up. We also have put together a sortable spreadsheet on which items are reacting the most favorably to momentum algo signals. Might show a few equity curves on those items. And I want to show a very specific example on XLE and how our momentum algo has been doing a very, very good job on XLE at suggesting going both long and short. XLE is an ETF that consists of large cap oil companies like ExxonMobil, for instance. And then, as always, during our quarterly premium plan webinar, if you would like to subscribe to one of our levels of service and you had never done so before, send me an email. There's my email, sid@elliottwaveplus.com, and say, hey, I'd like to try out your service and would appreciate that 50% refund on my first month. And we'll work that out through the email. So that's today's agenda. So very quickly at the very start, I would like to look at a few calls I've made over the past several years that have been especially timely. And this certainly is not an all-inclusive list. And it, let me see here. Okay, so I've built these using screenshots. Now, sometimes today I'll show you screenshots of particular calls I've made, and then other times I'll bring up my charting platform and we'll look at live charts. First one I'm going to show you is a call I made back in March of 2020. So that low right there was in March of 2020, and this is CCJ. It's a uranium stock. And this particular call that I made in March of 2020 in real time for subscribers was that a multi-decade ending contracting diagonal had likely just finished. So this wave 4 peak right here was approximately in late 2004. And so there's an ABC for 1 of a diagonal, ABC for 2 of a diagonal, ABC for 3 of the diagonal, ABC for 4 of the diagonal, ABC for 5 of the diagonal, and complete with a small throw over. And you can see that CCJ, a uranium stock, made it all the way down to, oh, I can't see the price on here, but it was around $5 a share. And this wave count, this is strictly an Elliott wave count. There's no Hurst cycle analysis on this chart or anything, but an ending diagonals typically end with a throwover of a line that connects 1 and 3 of an ending diagonal, and then you get a deep retracement. And because that lasted from 2004, this diagonal, through 2020, 16 years, there was likely to be a multi-year impulsive rally up out of that low. So let's see what happened. We're going to look at a current chart now of CCJ, that same uranium company, a Canadian company, one of the largest uranium miners on planet Earth. There's that low in March of 20, and that you can see the tail end of that ending contracting diagonal. And notice that I've added some additional labels onto this chart. These labels that I put down here are Hurst cycle analysis labels. So it considers that low in March of 2020 a 4.5-year cycle trough. So each 4.5-year cycle in Hurst cycle analysis consists of a 18-month cycle, and then actually an 18-month cycle here, another 18-month cycle, and then a third 18-month cycle to complete the 4.5-year cycle. Now, in this particular case, it's putting a 4.5-year cycle trough moniker here and a 9-year here. Now, we're likely to move into the first 18-month cycle within the next 4.5-year cycle. And so that's shows the Hurst cycle analysis. But from an Elliott Wave standpoint, what we got out of that low was a very clean, clear 5-wave impulse to the upside. 1, 2, 3, triangle for 4, and then a wave 5 that ended late last year. So in Elliott Wave, after a 5-wave up structure, the next thing you would get would be a 3-wave retrace of some kind, probably back to the area of the wave 4 of one lesser degree. But in this case, this wave 4, this 5th wave in blue, was extended. It moved past the most typical target for the end of a 5th wave in Elliott Wave, and that is where on a Similog chart using Similog Fibonacci tools, the wave 5 would be 0.618 times the net traveled of 1 through 3. And you can see it overshot that. So this was an extended 5th wave, and that which would not be unusual at all in Elliott Wave on a commodity-related stock. And in that case, the next pullback in 3 waves is likely to move back to the wave 2 within the final 5th wave. So that would be back all the way back to 2373. So this stock is at 49.51. We're likely to get a pullback now. Now, I've had subscribers say, yeah, but Sid, uranium is very bullish. It's the fundamentals are really strong. And I'm going to turn off the video of myself here real quick so you can see the whole chart. And all I can say to that is, well, how greedy do you want to get on this deal? Because I made this call back when the stock was near $5 and it peaked recently at $62.50. So this stock has risen over tenfold. Matter of fact, 1,080% since I made that real-time call for subscribers. So this was a huge, huge success. And people didn't figure out until this is well on its way up that the fundamentals were actually quite strong for uranium moving forward, and they continue to be strong. Still, after a 5-wave structure, you'd expect a correction. So that's going back all the way to March of 2020. How about a more recent call? Oh, and that call that I made as a reminder was made because of Elliott Wave. Elliott Wave. All right. This next call that I made, which was for a top in copper in May of 2024, May of last year, was primarily made because of sentiment. So a lot of people, and when copper was screaming and it broke above these highs back here, felt like copper was in a breakout mode and would keep going. But as you can tell from that chart I just showed, I was expecting a pullback. And here's the biggest reason why on that call, and that is sentiment. So at that May high of this year, the commercials, and by the way, commercials are, at least in the commodity trading world, commercials are the producers of copper. So it'd be the copper miners, basically. And the producers of commodities have large trading accounts. And the reason they keep those is because many times there are very wild swings on the commodity that they, in this case, they are digging out of the ground and selling. And so if they suspect or want to protect themselves from a move to the downside, they will, in their trading account, they will short the very commodity that they produce. And that way, during a pullback, they're making money in their trading account, their large trading account. That is called hedging. So they're protecting themselves from a dip in price. Now, commercials who make their business to know absolutely everything that can be known about their business, including supply and demand, how, what the economy around the globe, look like moving forward, um, et cetera, et cetera. And the way they generally handle their hedging accounts is when price is moving strongly to the upside, they build a position against it. And you can see the commercials started shorting all the way back here, and they built a short position against it, knowing that it would not to be able to continue to scream higher like that, given everything that they were aware of about supply and demand, what the strength of the economies were then and were expected to be moving forward. At the very same time, retail traders, and that's this second indicator down here, they are momentum traders. And when they see some momentum moving strongly in a direction, they pile on. And the more it screams higher in this particular case, the more they get long. They add to their longs, and or the people that are shorting it have to bail out. And so what you all end up with is 88% in this case of retail traders with long positions. This is what we call here at Elliott Wave Plus a perfect storm. In this case, it was a perfect storm of bearishness, where commercials were the smart money were heavily short, retail traders were heavily long, and not to mention this brown stripe right here indicated that the ADX indicator on using ADX, a well-known uh, indicator, was over 60 on a weekly chart. So it was deeply, deeply overbought. All those things combined for a peak and a strong reversal. That is what we saw here at Elliott Wave Plus as it was screaming higher into that May high. Now, does that mean that we're always bearish? No, no. We go with the flow of this chart. For instance, back in July of 2022, right here, commercials were heavily long. Retail traders, there was only 12% on this week right here. There was only 12% retail traders that were bullish. This was a perfect storm of bullishness. And you can see the nice move that happened to the upside after that. Then here in February 2023, commercials were heavily short. By the way, this is a 12-month look back. So that means the commercials were uh, all during this period here as hedged or short as they had been at any point over the past 12 months. During this phase right here, they were as long. They had taken off their hedges. They figured copper to move probably about as low as it can go. We know it's worth more than that. And so they took off their hedges. They were long. And the retail traders who are often on the wrong, all over on the wrong side of a boat at the point that it capsizes. We're dead wrong in staying short into these lows. But we got the opposite condition here. There's a perfect storm of bearishness. And then right here, commercials heavily long, only 19% retail traders were bullish. That was a bullish condition. And so it just floats from bullish to bearish. This is one of the beauties of trading commodities is you get a direct look into how the commercials are hedged versus retail traders. And it's I would say the information you get from commercials positioning when it comes to commodities trading is more meaningful than it is in, for instance, stock market or even though it is still meaningful there, or currencies. It's still meaningful there too as well, but it's especially meaningful when it comes to commodities. How about gold? Well, back in here's some old screenshots. So these old screenshots that I'm showing are the exact screenshots that I pulled from our history of screenshots that we can very long history. We hide nothing. Almost no other Elliott Wave service, to my knowledge, will leave all of their analysis up for years and years for you to go back and scrutinize. But you can see we've got screenshots going back months and months and quarters and quarters and quarters, and we have webinars, weekly webinar recordings. I do a weekly webinar every Sunday, going back many years on both. And so I went back into history and I pulled some of these screenshots from the history there. This is the gold chart, and this chart was in October 21 of 2022, and you could see that I was already putting a black or intermediate, it's a pretty large degree, wave 4 at that low and expecting a rally out of that low next up through September of 2023. Now, I want you to notice these Hurst designations as well as dates that I'm showing, because those dates are based on something called the composite line in Sentient Trader software. Sentient Trader software is Hurst's original nominal model, developed over 50 years ago, that was programmed in by David Hickson and some additional programming helpers to create an app or a software package out of it that will analyze any chart using Hurst's system. And you'll notice that right now, this is a current analysis. And I'm using both peak and trough analysis. It was calling this low right here. This is October of 2022. At this juncture, it's calling it a 9-year cycle trough. And the orange line is what is called the composite line. It takes all the cyclic information that this is able to derive from about a dozen different lengths of cycles, both on peaks and troughs, and it comes up with kind of a roadmap of where it is expected to peak next and where it is expected to create a price trough, a cycle trough, or these are cyclic peaks and cyclic troughs. And then it moves forward in time and it gives you somewhat of a forward roadmap. Now, sometimes it's incorrect. And it does some nonsensical things, and so, but it does allow you to do something that we call a repin. If you think you have a better beat on how the peaks and troughs are unfolding moving forward. But it's putting it at that October 2022 low, a large cycle trough, and then it's putting the 40-week cycle trough at the October of 2023 low. So that Hurst cycle analysis hasn't really changed much. And so I was showing you, let's see, the 2022, hang on a second, the 2022 chart, October 2022, and showing you that it was expecting a large cycle trough there at the time. And the move up through September of 2023. Remember that. And then a pullback through April of 2024. So let's see how, and then here's a chart of 1 year later that I said was providing to subscribers. It was a very bullish count on gold, and starting in October was bullish all the way probably into September 2025, according to this. But initially up from approximately October of 2023 through late March of 2024. So here is a chart, and I need to name that wrong. This is a current chart on gold. So there's the October 2022 low. There's the October 2023 low, and you can see price has been moving up very much in keeping with my roadmaps at that time. It's important to remember that as time moves on, these Hurst cycle analyses morph just a little bit, but it was very clear to subscribers in 2022 that they should be long on gold all the way next through September of 2023. That would be almost a full year. And then it was very important, it was very clear to paying subscribers here at Elliott Wave Plus at the Pro plan or Premium plan levels, that in October of 2023, it was very important to be long for at least the next 6 months. So all of those things worked out beautifully well, and this is kind of the current roadmap on gold. We're very likely in a wave 4 pullback now down into April before moving higher, probably into August, and that is based on this current Hurst cycle analysis on gold, to move down into a 40-week cycle trough due in approximately April, and then a bounce out of that low. So that concludes the section where I wanted to go over some really successful calls that several of them that have made going back more than 6 or 8 months. Now let's look at the more recent calls. And going back to my outline, yeah, the next item up is more recent calls. We're going to start with Apple. So, and then on this, I want to also show some live charts. So now I'm at my live platform, which I use Trade Navigator by Genesis. And this is a long-term chart on the Apple that I've held for a very, very long time. And starting at the inception of Apple back around 1980, it gave a leading diagonal for a wave 1, and then a wave 2, and then a wave 3 here through the middle of 2015, wave 4 low in the middle of 2016, and since then a 5-wave up structure, 1, 2, 3, running flat for 4, and then a 5th wave up. And I've had this very long-term Fibonacci target at 274 for Apple. I've had it on the chart for years. So that's a current chart. And then here is a current chart of the weekly chart. Notice that Hurst was projecting that there was a large cycle trough here that occurred in January 2023, and I have been labeling this for quite a while as an ongoing ending contracting diagonal, where you move up ABC for wave 1 of the diagonal, ABC for 2 of the diagonal, 3 of the diagonal, 4 of the diagonal. Officially, wave 4 of the diagonal must move down into the price territory of wave 1. It must overlap into that in order to be a Frost and Prechter ending contracting diagonal. And in Apple, that dip that occurred back in early August did, in fact, do that. And then we have the upward movement since then, which this is a current chart of Apple I'm labeling as an A. And by the way, each leg of a diagonal is typically an ABC zigzag, an A triangle for wave B, and a terminal thrust out of the triangle for C. So it wasn't very long ago. It was up through about Christmas that all the talk was super bullish about Apple, and the talking head pundits on financial propaganda TV were talking about how great Apple was, Apple's it, the is, and everything. And then it started to move over, and now they're saying it's like, well, I don't know, maybe they're not so great. It's like almost everything they say on propaganda financial TV is worthless. Almost everything they say is worthless propaganda. So what we're seeing to the downside here, so I'm calling this a terminal thrust run triangle. In Elliott Wave, that means this is the last wave of a pattern. An A triangle for B, the C wave's going to be it. That's it. It's going to be aggressive. And terminal thrusts out of triangles typically are quite aggressive, and this really was quite aggressive. But they are often, the thrust is often completely retraced just as fast, or maybe even faster sometimes, than it went up. And that's exactly what's happening. So going back to my uh, call, on this, there's the ending diagonal, the A, B, C, and Hurst cycle analysis with on this date. This chart was published on 12/22. Was expecting this to finish going up and plunge down into mid to a little past mid January next. And then the daily chart that on that same December 22 was calling for Apple to peak and move down through approximately Jan 22 and then rebound until April 13. So that has gradually morphed to just a little, but not very much. So going back to the live chart on Apple, it so the 40-week cycle trough was due somewhere now recently between Jan 12 and Jan 20. And so this is probably a 1, 2, 3, 4, 5, just about finished. And notice that the thrust out of the triangle is almost completely retraced now. And then the rebound is expected to only occur through late February now. And then more bearishness on Apple. I think this is a very large degree, at least a cycle degree, wave 5 peak that we just saw in Apple. This very bearish down into September of this year next. That's when the next 18-month cycle trough is due. So next, here's a recent call I made on FCG natural gas stocks. Notice that on this chart, that up from the March of 2020 low, we got a 1, 2, and 3, pretty clear, and then what looks like a triangle for wave 4 down through early 2024, and then a 1, 2, 1, 2 setup, and potentially very bullish on natural gas stock. So this chart dates from December 29 that I provided to subscribers. So what's happened on FCG lately? Let's see. For that, we're going to run to sectors. Stay tuned. There's a bunch more calls that I've made in the last 6 months coming up over the next few minutes. So this is what happened out of that low in December right here. So we've had 4 consecutive weeks of pretty aggressive upward movement in natural gas stocks. Now it's probably time for a little bit of a pullback, but generally on this, looking to the upside through mid-May and really all the way through March of 2027. We'll see if that roadmap turns out. Also, this sideways price action of a triangle and then the beginning of a thrust out of a triangle. And the beginning of the thrust out of the triangle would start with a 1-2, 1-2, 1-2 setup. So approximately in mid-June of this year, that's going to be all of the sideways price action inside of this kind of sideways channel, and then it's going to probably break out during the second half of this year. Okay, let's look at Nasdaq. So this is the weekly sentiment conditions chart that I provide on a weekly basis, updated for premium plan members on the Nasdaq. The date on this chart is 12/14/24, so December 14. Notice the commercials had on during this last little move to the upside through late in the year, had all of a sudden been moving to fully hedged position, as short as they had been at any point in the last 12 months. Retail traders, though, were still quite bullish, recently peaking at 83% bulls and still at 79% bulls. And that, when I presented this to subscribers, all we needed was a red candle, and when the candle colors on my weekly and daily sentiment screenshots are the 3-period moving average, the slope of the 3-period moving average of the DSI or daily sentiment index. And so I warned that the very next red candle would create a perfect storm of bearishness on the Nasdaq. And so my weekly chart wave count that I presented, and the date on this is also December 15, so it's a month old, was expecting a peak in the NASDAQ and then a move down into April next, to follow by a move up through August of this year. So please be advised that it is my opinion that this year, 2025, will still be in a topping process on the stock market until through most of the year. But at least right now, I think we're in a down move that'll take us down into April. Then we'll get a rebound into approximately August. And then it could get much more aggressive to the downside. In other words, my main count is this would be a wave 1, this would be a 2, and then it starts getting into a wave 3 downside character, which in the Elliott Wave is the most aggressive of the 5 waves in a 5-wave impulse when you're talking about stock market related item. So that was my count then. And so I've shown you the weekly sentiment and the weekly chart. So let's go to a live chart on the Nasdaq 100 and take a look at what's happened since mid-December. So from a very large degree perspective on my wave count on NASDAQ is expecting up top in December, and then generally a move down into January of 2007, rebounded to November of 2028, and then down into January of 2031. I want to show you a um, a cycle tool that is available at the Foundation for the Study of Cycle. And I'm going to bring in a weekly chart of the Nasdaq 100. I'm going to have it look back at all the data that it can bring in. So that would be back to 1993. And then you'll notice that there's one particular cycle that is the what you would consider to be in cycle world the dominant cycle, the dominant cycle. And that is a 182 week cycle. 182 weeks is basically 3.5 years from the cycle bottom to cycle bottom and from cycle top to cycle top. But I want to also show you that it does not nail every peak and trough. Sometimes it comes close, like this bottom back in early 2016 came very close there. But you can see it was calling for a cycle peak here, and that was a little early. The cycle that the market peaked after that projected peak, and then in this case, the 2020 low, March of 2020 low, actually came in a bit late, which is unusual. But then the next peak in November of 2021 came in a bit late. And then the next trough came in a few months early in October of 2022. So it is projecting that we are basically at a significant peak in the market. And then we're moving down into approximately the third quarter of 2026 next on that dominant cycle. So that's one way to look at it. What if we added a few more cycles to try to see if we, the ones that are the most prominent, but some shorter term cycle? And you can see that it doesn't change that very much. It adds a little bit of flavor, some ups and downs within the swings. But it still is expecting down through September of 2026, August of 26, and then on down through into near the year 2030. Um, the reason I point that out to you is it basically concurs with the Hurst cycle analysis that I've done on the Nasdaq. The Hurst cycle analysis doesn't attempt to find the most dominant cycle. It just finds about a dozen different cycles, and it fits it into a model. On the stock market, we only use troughs. We don't use peaks on Hurst cycle analysis. And so on this weekly chart, you can see that it is calling for downward movement through basically mid-year this year. But the main thing I wanted to point out to you was that that wave count and the sentiment conditions that I showed you at that mid-December wave count was projecting that it would peak about there and then start moving to the downside next. And Hurst cycle analysis was expecting a trough in mid-January, a 20-week cycle trough. This is a current daily chart. And it looks like we got a leading diagonal to the downside, and now we're getting a bounce. And so if you were just an Elliott Wave only counter, here's the way you would handle this. Let me get this kind of spread out a little bit here on this daily chart. If you counted this as a leading contracting diagonal, then you would look for a deep retracement. So you draw the Fibonacci. And you'd look for a retrace, probably a 0.618 retrace. So one back to 21,509, and then you want to get short right there. So that is basic Elliott Wave only trading. 5 waves down, leading diagonal, typically deeply retraced. Look for a 0.618 retracement, and hopefully it moves back to that in 3 waves, and that's your spot to short. Well, here's where Hurst cycle analysis comes into play very strongly and assists in what to do in a situation where you think you've got 5 waves down and now you're looking for a 3-wave pullback. Let me get it back looking the way it was. There we go. So Hurst thinks that this rebound is out of a 20-week cycle trough, so that the rebound is going to take multiple weeks, possibly all the way to early March. But the reason I've drawn it the way I have as a 3-wave bounce back and topping in February is because a similar Hurst analysis on virtually all of the other items that I count, which would be the S&P, the Dow Jones Industrial Average, and the Russell, and a whole bunch, dozens of individual stocks, are suggesting that this move out of this 20-week cycle trough, which is universally correct, or Hurst is thinking that in virtually every individual stock, that we're going to get a multi-week bounce, which probably might only last till mid-February, maybe late February. And so I've drawn it the way I have because I count so many things that it might not make it till March 5. But notice I've made one additional note on this chart, and that is that it's possible we could get a new all-time high by then. And the reason is because the composite line is quite bullish, and it suggests we will get a new all-time high by then. So in the Sunday webinar that I just finished just a few days ago for my paying subscribers, I told them, look, I wouldn't fall in love with being bearish here, to overly bearish, because we're within a day or two of a 20-week cycle trough, and the bounce out of that low is very likely going to be a multi-week bounce. So yes, I was bearish in mid-December. By the time we got into mid-January, because of Hurst cycle analysis, I was suggesting, hey, probably ought to either tighten the stops or just take your profit, because I think we're within a day or two of a bounce, and that's exactly what we started getting on Friday of last week. That is very likely the 20-week cycle trough that we just saw. And leading diagonals don't exactly present the highest confidence in that we got a clean, clear 5 down, because they're choppy and overlapping. And they're also typically deeply retraced. But the bullishness of the composite line out of that low has caused me to warn my paying subscribers, and they knew that we could be getting this bounce that we're getting right now. Next item. So there's a few more of calls I've made recently that I think are important ones, and I've got platinum, the Shanghai Composite, bonds, and XLE, and then it's a single stock Zillow that I'm going to try to run a little quicker through. This is the screenshot I sent to subscribers on January 1 of this year. That's right, I worked on New Year's Day. But suggested that we were within an eyelash of finishing this downward movement on platinum, that a potential 18-month cycle trough was due. Manual phasing, that's what I put down here, was also suggesting a low in January, and a potential big rally on platinum out of that low that could take us all the way through most of this year. That was my January 1 screenshot I sent to subscribers, corroborating evidence that came in the weekly sentiment conditions screenshot.
Here, this is the screenshot dated December 21. But the platinum had been moving lower, and had seen a full-on bearish storm as recently as October, where commercials were heavily short and retail was 77% bullish, and that created a bearish condition, and we got to the downward price action that followed. But notice what I had noted for subscribers. We are nearing a bullish spread where the only 17% of retail traders are bullish, and commercials traders were very quickly taking off their hedges. So moving to a live chart on platinum, let's take a look at that. What's happening there? Okay, the weekly count on platinum is quite bullish still. We very likely got that important low. It's probably an 18-month cycle trough. And expecting a rally through most of the year, and we got a nice little pop off of that low, and then it pulled back some now. But the Hurst analysis on this is still bullish. It's bullish through mid-February, and then it's calling for a pullback through late March before it continues higher. All the way, and the next 18-month cycle peak isn't due until October of this year. So platinum still looks quite bullish. Let's look at what the platinum weekly sentiment chart ended up doing. Well, we started getting green candles, and also commercials have came within an eyelash of being fully long as they had been at any point in the last 12 months. We don't really have a lot of strong volume coming in yet, showing on this weekly sentiment chart. So I'm going to move to the daily sentiment chart that we send out to premium plan subscribers every night. Notice that commercials are heavily long as a percent of open interest. Now, this in daily sentiment conditions chart is a little different than the weekly. It shows you three different measures of commercial sentiment. The commercials as a percent of open interest is the fastest acting of the three. Commercials on a 6-month look back shows how commercials are positioned in comparison with their most bullish and bearish positioning over the last 6 months. And then this one is over the last 12 months. It's the slowest acting. So it's like a fast, medium, slow. And that's the way commercials work. They build positions over time. So as platinum came down right here, commercials started building long positions against it. They were fading the trend, knowing that they would get a trend change at some point. And notice they got one right here, and you can immediately see their reaction. They started taking off long positions, but for the most part, are still heavily long. Also, on our daily sentiment conditions screenshots, which we provide on probably 40 different items for traders, are in notations of potential periods of bullish or bearish seasonality. And we've been in a period of bullish seasonality on platinum since December 6th, and will continue to be through Jan 24. So going back to the weekly chart, I think this turns right around and starts heading back up. We'll see, but there's a very large cycle trough due in January. I think it may have happened very early in the month. Next, Shanghai Composite. This chart I sent out to subscribers on September 15 of 2024. And we had gotten a big bounce on Shanghai Composite out of this low.
early in the year 2024, but then it had almost completely retraced. But you'll notice that it was immediately bullish in mid-September for a bounce on the Shanghai. This is, and the way I represented it to subscribers was this was a potential low risk, high reward, long opportunity because Hurst was calling this the end of a 9-year cycle trough. Also, from a Elliott Wave standpoint, this low in early 2024, I think, was the end of a multi-decade triangle, and that we were going to get a bullish move out of Chinese stock market out of that low, and it would start with a 1 and a 2. So that chart was sent out on September 15 of 2024, and it was explained to subscribers live in a webinar, weekend webinar at that time. So let's look at move to the Shanghai. See what it did since mid-September. Okay, well, I'm holding the candle. I'm holding over my cursor over is in mid-September. That's September 20, and they announced stimulus, and we got that huge pop. And notice this is still holding as a 9-year cycle trough. This was very likely a 40-week. And this most recent low that we just saw is probably a 20-week cycle trough, looking for a move to the upside all the way into mid-June on the Shanghai Composite. The Shanghai Composite is small and mid-cap Chinese stocks that don't do business outside of China as a general rule. They're mainland China business. They would respond very favorably to another round of stimulus. I wouldn't be surprised to see them come in with another round of stimulus of some kind, especially with the inauguration coming up here within a few days, uh, and the potential of additional tariffs coming on. I would expect they would probably come in with some stimulus to try to overcome that. Hurst cycle analysis, once again, is giving us a clue as to about when that'll happen. I think we might be very close. So if you like the idea of small and mid caps, this would be sort of like the equivalent in China of our Russell 2000 here. The Hang Seng, on the other hand, is the equivalent in China of our Dow Jones Industrial Average, or maybe S&P. And it is also bullish based on Hurst, probably for a move up at least through mid-March next. So we could easily see stimulus come in from China that would push that thing higher there as well. Next item, TLT. This is my chart that I sent to subscribers on September 22, 2024. And it was bearish on bonds, even though the Fed had just announced their first cut. So the Fed stayed at zero interest rates, or near zero, until about right here. That was their first raise. So this should be your first clue that the Fed lags. They lag the bond market. They don't drive the bond market like they constantly say on propaganda TV. They react to it. And so the bonds actually topped way back here in early 2020, 2020, March of 2020, and had been moving down, and it was getting into a kind of a wave 3 of 3 point of recognition before they finally raised the first time. And then they raised a bunch of times trying to get caught up. And then their last raise was right here. Well, soon after, bonds finished the fifth wave down. One, two, one, two, three, four, three, triangle for four, five, that five wave down structure. And ever since then, bonds have been generally moving up or sideways. And that means that yields, if you start at this low back here, um, have been moving down officially, although we'll have to look and see what's happened since then. But anyway, this was bearish. This was a bearish call on bonds starting at approximately mid-September, moving down for the rest of the year. So this dotted line right here is the end of the year. So that's what happened was my call on TLT. That starting in approximately September, they would move to the downside, despite the fact that the Fed was uh, was cutting. And if you ever needed definitive proof that the Fed does not drive rates, the Fed does not drive the bond market. The bond market drives the Fed. This is your proof positive. Because right there is their first cut. If they were cutting, then conventional wisdom, if the Fed was driving the market, they would have kept going up. Bonds would have kept going up, and yields would have kept going down. But when they started to cut, yields started going up. And my call was for them to move down for the balance of the year, which they have done. And they're even moving a little bit lower here at the beginning of this year. And the Hurst has kind of changed a little bit and is projecting that bonds will bottom uh, and yields will peak in approximately mid-March. And then I think we get a bounce on bonds and we have yields coming off for a whole year after that. So that was an excellent call that flew in the face of conventional wisdom about the Fed and their power over uh, rates. Next item up here is XLE. Here was my call on XLE, and I've got two different spreadsheet or screenshots. This one's from December 22. It was immediately bullish on XLE. And notice that it also um, was projecting we got a 1 and 2 and 3 up from the March of 2020 low, but then moved sideways, probably in a triangle. And just like natural gas stocks, we moved up in 1 and a 2, and I was putting the wave 2 moniker or label right here. And the price had moved down almost to invalidation when I printed this chart. But Hurst was expecting that we would get a low in December, mid-December, and then a rally for approximately the next 3 quarters on XLE, large cap oil stock. And that was fitting with this being a triangle and a 1, 2, and then on up from there. That was the 1222 screenshot. Then I also took here's the next screenshot 1 week later. Oh, well, this is of the algo, which I'll cover later for you. But suffice it to say, we'll get to a live chart on XLE here for that. Hang on. So XLE, here's the weekly chart. And what you'll see here is that price made a slight lower low here than it did here. And I had to change my wave count. So officially, my wave count was invalidated. But did I freak out when it was invalidated and figure, oh, whoa, whoa, I have an invalidation here. We're going down. No, this is once again, another value of having Hurst cycle analysis as a companion. It was still expecting a large cycle trough, in this case, a 40-week cycle trough in December. That trough did form, and we've started into a nice rally off of this low. So the invalidation didn't bother me one little bit, and I'm hoping it didn't bother my subscribers, who most of them have been with me for a long time. I've been integrating Hurst and Elliott Wave together for 10 years now. And I've had a subscription service since 2010. And they are accustomed to me not worrying too much about Elliott Wave invalidations in certain situations if the Hurst cycle analysis is expecting a large cycle peak or trough at that time. And now we've got, you know, about 4 weeks of solid upward movement on XLE out of that low. How big's the move? This is the daily chart. Well, so far out of that low, XLE is up to over 12%, and that's since Christmas. Very impulsive move up out of there. And, you know, as you can see, bullish until mid-April, looking for a pullback into September, and then on up. So this is oil stocks look good. Natural gas stocks look good. Energy has been the big winner since December, since about Christmas, and I made those calls right on the money so far. Knock on wood. And then finally, this is Zillow stock, and this is a stock that I screenshot. I went back. I actually was pretty bullish on Zillow out of this low and out of this low, based strictly on Hearst. And here's a stock that bottomed in March of 2020, rallied very strongly up through early 2021, and then gave almost all of that rally back. So this would be a small cap. This stock, I'm sure, is included in the Russell. But I noticed that it gave 5 waves up here, followed by um, 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 kind of a straight line B wave into a 4.5 year Hurst cycle trough. And so I've been bullish ever since. And I felt like this was a 5 wave up structure here, followed by a deep pullback, and then it would likely break out above these lows toward moving. And this analysis was put out in early September, and it would be bullish pretty much all the way through mid-December. So let's look at my Zillow stock. And the reason I would cover a stock like Zillow is I just kind of found it. And, you know, there's a lot of these narratives that are constantly being spewed on propaganda financial TV that the grand hope for 2025 for most of the long-only money managers is that we're getting a widening out of the stock market, and we'll get it'll widen out so much that the entire Russell will carry the day. Well, I don't believe that's the way it's going to occur. I think you'll find pockets. You'll find some individual stocks that can rally in a bear market, but they're going to be hard to find. So this stock was about right in here. That was in mid-September. Yeah, right here, early September, when on that last screenshot, and you see it did break out above those lows, and it looks very impulsive. And Hurst is still bullish. And so it did, in fact, move up from early September through through mid-December, just like Hurst was thinking that it would. Notice that I keep wave counts, and if you look at you can see these tabs along the bottom on Apple, Amazon, Boeing, Disney, Google, Meta, Microsoft, Netflix, NVIDIA, Tesla, Alibaba, DuPont, Zillow, FNGS, ExxonMobil, Walmart, Palantir, and Berkshire Hathaway. So I want to get back to my original outline real quick. Where is it? It is there. So that completes the most recent calls. So I was going to do a whole section and show you on platinum our weekly sentiment screenshots and our daily sentiment screenshots, but I went over those already for you during the platinum section. And this is kind of the way I like to explain how to use our sentiment condition screenshots. The weekly sentiment screenshots. Okay, so this is, I'm going to bring this over, put this away. This is all the weekly sentiment screenshots that I do for premium plan subscribers every Saturday. And they receive these on a Sunday. So it's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 30, 34 screenshots, the weekly sentiment screenshots. And if a perfect storm is developing, I'll put 3 exclamation marks from each one. So the premium plan members get this folder. They have access to it through our website. And they can download all these and save them, or they can just look at them. And I want to look at platinum real quick, just to remind you that we have a bullish storm condition that just developed where commercials, at least when I took this screenshot on Saturday, we had reached the threshold to be for being fully long or out basically as long as they had been at any point in the last 12 months. They've been taking off their hedges very quickly. Retail traders were recently only 17% bulls. And so that is just a refresher to remind you that I already covered the weekly and daily screenshots on Platinum in the webinar. The way I look at it is the weekly sentiment conditions will point out the best trades, best potential major trend changes on the near horizon. I'm going to show you what those were on the weekend, this recent weekend. Australian dollar, commercials heavily long, retail heavily short. Green candle inside of a green box, bullish. Perfect storm of bullishness. British pound. What you'll find is that all of these currencies are suggesting that the US dollar is at or near an important peak because all of these currencies that aren't the US dollar have been moving down and are in a sentiment condition spread for a bounce, a multi-week, probably a multi-month bounce. Notice British pound, commercials heavily long, retail very near heavily short there. It's nearing a bullish spread. Canadian dollar. The green box means that the 12-month look back commercials are heavily long. The little green triangles inside the green box mean that the DSI is at 15 or below. In other words, retail traders are heavily bearish at the same time as commercial investors are heavily bullish. This is the perfect storm we're looking for, and we're even getting some corroboration here on the Canadian dollar for a significant reversal out of the money flow index versus RSI indicator, which there for a little minute there on that dark green stripe, the money flow was above the RSI, even though the RSI was oversold. The last time we got that kind of condition was right here, and that was followed by a multi-month rally. The last time we got the opposite condition was here, and that was caused by, that was followed by a multi-year decline. So these color codes that are on every one of these weekly screenshots using the way I programmed the money flow versus RSI indicator are extremely helpful as well. Also, I've got charts here. I'm suggesting a bearish turn on coffee. I'm expecting a bearish turn on corn. I'm expecting a bullish turn on cotton based on sentiment. Here's the euro. It's been moving aggressively to the downside. It's in a perfect position for a bounce. Commercials heavily long, retail heavily short. Also, the ADX indicator is over 60 on a weekly chart. So the euro is deeply oversold. And I'm looking for all these exclamation marks. Looking for a pullback on live cattle. I already showed you the Nasdaq. Nasdaq was starting to break down through a long-standing trend line. Commercials heavily short, retail recently heavily long. It's a bearish perfect storm on Nasdaq. Orange juice, perfect storm of bearishness. Palladium, perfect storm of bullishness. I'm nearing a perfect storm of bullishness on palladium, another industrial metal. So that would go with platinum. Industrial metals look like they are nearing a perfect storm of bullishness. I already showed you the platinum. Swiss franc. The Swiss franc is deeply oversold and expecting a bounce against the dollar. And so, in essence, what all of those suggested to subscribers, oh yeah, and on wheat, well, looking for a bounce on wheat, commercials heavily long, retail heavily short. All of those were pointed out to my premium plan subscribers on Sunday. So you can see it's very easy to pinpoint, which items would be the most likely to turn based on a perfect storm of commercials versus retail sentiment. It works over and over and over again. That way you don't have to sit there and trade your way through some sideways market on the S&P when there's lots of other of things that you could be trading that would where you could be making some headway. So the weekly charts basically, let's say you've never been to a particular big city and you're in a rental car and you're using the GPS and you're trying to get to a big ballpark. The weekly chart gets you to the ballpark. It's like the GPS. It gets you to the parking lot. The daily chart of the sentiment conditions will get you to your seating section. And then combined Elliott Wave and Fibonacci and Hurst Cycle Analysis will take you to your seat. That is the way we roll here at Elliott Wave Plus. So what's been going on in the markets lately? There's several stocks that have been bubbling up in a rotation. It's to me, it's incredibly fishy that a handful of stocks in this appears to be a systemic rotation have been in a smoke and mirrors way, keeping the stock market indices up. Let's take a quick peek at a few of those stocks in case you haven't seen a chart on them, and I've got them right here. NVIDIA. So NVIDIA, starting at this low back here in December of 2018, where it was a $3.11 stock, moved up, and that was the beginning of a large degree fifth wave up. 1, 2, 3, 4, 5 in 5 waves. And the amazing thing about the NVIDIA move was that the wave 3 was extended, and so was the wave 5. They were both extended. That's rare, but it can happen, according to the Blue Book. And the subdivision's up from the low here in October of 2022. 1, 2, 3, 4, 5. And that's this last move to the upside, I think, was an ending contracting diagonal. Now we're getting a pullback on NVIDIA. NVIDIA is now in the Dow Jones Industrial Average. It's done everything it needs to do, including all the subdivisions from an Elliott Wave standpoint, and all the Fibonacci targets have been hit and exceeded by a little. I think we're going to get a significant pullback on NVIDIA, and that it's likely, if this was a wave 5 of 5 to the upside, and it was an extended wave, which it was, then we would expect, according to Elliott Wave theory, a move back to the extreme of wave 2 within that extended fifth wave. So that's all the way back to $13.88. And you can see both the cycle tools that I use, and on this one, I'm using the cycle tool as its foundation for the study of cycles, are expecting a corrective pullback, multiple year corrective pullback. Actually, down into August of 2026 next. So this has been a bubble stock. What else has been in a bubble? How about Walmart's? How can an old line blue chip stock do that? I mean, it's been a very bizarre rotation among a few stocks, and Walmart's a very important stock. And from May of 2022, it moved from $39 a share to a high back in December of $96 a share. How does a fully mature blue chip stock do that? Well, because what we saw here was a bubble. And we saw a parabolic move toward the end of that, and a blow off top. That top's probably in. Here's another one, Palantir. Look at what this stock has done. It is absolutely absurd, and the valuation is absolutely ridiculous. And this was very likely a bubble. This bubble has probably burst on Palantir. How about MicroStrategy? MicroStrategy is that it's officially a software company. But he has turned into the grand manipulator of Bitcoin. The owner of the company has taken all of its cash, all available cash. He brought in investors to bring in more cash so that he can keep buying Bitcoin. So here's the long-term charts up from the November of 2022 high. Notice that low was almost universal in the stock market and most stocks. October or November 2022. It appears that we have a completed 5-wave up structure.
directly to the best Fibonacci target for the end of that fifth wave. So up from this low, 1, 2, 3, expanded flat for 4, and then a 5-wave up structure for 5. Best target for a fifth wave, where it's 0.618 times the net travel to 1 through 3. So Bitcoin has done everything it needs to do from an Elliott Wave standpoint to complete a 5-wave up structure from the December of 2018 low, which happens to be the very same date of the low I just showed you on NVIDIA stock when it was $3. But moving into the daily chart, after it put in that peak, which Hurst Cycle Analysis is calling a mid-December, that mid-December peak, an 18-month cycle trough, it has moved down, but it has not been, did not move down in a very convincing 5-wave structure. Why? Why can't it act normal from an Elliott wave perspective? And the reason is it's got to be the fact that MicroStrategy has been buying exponentially more Bitcoins recently. So on this date here, this was in mid-September, just a few months ago. MicroStrategy owned about $225,000 worth of Bitcoins. Now they have $450,000 of Bitcoins here in mid-January. So they have been buying recently, and every time they buy on my daily chart on Bitcoin, I will show their buy date and how much they own now. And you can see that back here in September, they only owed about 245,000. They only owned 386,000 here, but now they own 450,000. They have done a huge amount of buying during this sideways price action. So much so that it has raised their average cost tremendously. They've almost doubled the number of Bitcoins they own from the time it was around 60,000 to now where it's around 100,000. Most of the buying right through here. So we have a grand manipulator that's in the markets. The problem I see with that is the day that dude decides to dump his this thing is going to crash like nothing we've ever seen before. And so if you now he constantly says, "Oh, I am going to never sell. I'm going to keep buying. I'm going to find more investors that put millions more dollars into this, and we're just going to keep buying Bitcoin." That's what he says. Is that something you want to put your entire life savings into? What he says? I certainly wouldn't. I think this is one of the most dangerous environments for a crash I've ever seen on any item ever. Um, but this is really interesting. So I've recently had to consider the possibility that it might not have put in its all-time high, that this is a 1 and a 2 and a 3 and a 4, and then we're moving up into late February. Notice these dates. A 20-week cycle trough in this case in mid-January, and then a move up into late February. That's identical to what I showed you earlier in the market on almost all the stocks, all of the individual stocks. So it's just moving like the stock market. But let's look at MicroStrategy stock. There's something really important about this stock from an Elliott Wave standpoint, and that this period from March of 2024 through September of 2024 is clearly a triangle. So that movement up from that triangle is clearly a terminal thrust from the triangle. It very nearly hit
couple of Fibonacci's up here. It fell, it's just slightly short of them. But typically, thrusts from Elliott Wave triangles are terminal. In other words, they're super aggressive until they're done. And when they're done, they're done. And this appears to be done. A huge warning sign. Is there any other warning sign from any other bubble-ish stocks? Well, Mara is a large crypto mining company. From March of 2000 through November of 2021, it was off to the races in a massive five-wave impulse. But then the stock moved down in five waves after that. And then the movement up since the late 2022 has been clearly corrective, choppy, and overlapping. There's no way that's an impulse. So this is going to fail, and the stock is going to crash. Another massive warning sign about Bitcoin and Ethereum. Coinbase. Hurst is very bearish on this stock down through the middle of May of 2026. So I think this whole Bitcoin facade is finally they're going to pull back the curtain, and it'll all be exposed for what it was, which is a bubble where what you are going to end up with on a lot of these is nothing. I hate to say it, but these charts don't lie. For instance, the very, very clear corrective upward activity in Mara crypto mining stock. Why would it quit going up while Bitcoin might continue to make a new all-time high? Probably because of the energy suck that Bitcoin it will never be able to escape. Now, Ethereum is better, but Bitcoin is antiquated and is sucking energy off the grid at an alarming rate and causing countries to go back to coal, to build nuclear plants as fast as they can. There's a definite depletion factor on natural gas that's underway. So I think that cryptos are causing more trouble than they are helping anyone at this stage. Um, let's see here. And getting back to the document. Oh, I want to take a look at FNGS, and this is the FANGs ETF. And I want to look at Berkshire. I think those two are going to be incredibly important to track moving forward from an Elliott Wave and Hurst cycle standpoint. Now, I already explained that the stock market is probably unlikely to widen out. And all you'd have to do is look at my Russell wave count in order to see that that's pretty clear. But there are going to be a few winners in there, like Zillow, for instance. Um, but So I'm going to show you the Russell count, and I'm going to show you the FANGs and the Berkshire Hathaway wave count. Going back to individual we'll go to Russell first. The Russell chart doesn't look like anything else. It doesn't look like the S&P or the Nasdaq chart. It's kind of beating to its own drum. And it recently made an ever so slight new all-time high. So we'll go to the weekly chart on the Russell. So for one day, intraday, it made a new high above the high that back in 2021. It still, I don't think, has made a new closing high on a weekly basis. But the real trouble with it is that
this since it did make a new high from an Elliott Wave standpoint, that had to be a fifth wave up. So 1, 2, 3, ABC for 4. So this is October of 2023. Then 1, 2, 3, triangle for 4, and then an ending diagonal for 5. It's all way too choppy to be anything else. And now it's starting to peel back, and Hurst thinks it moves down into April and then up into August, just like almost everything else. That is not, it is well below that all-time high already. And frankly, it's it's currently below even the high that it made in March of 2021. It's below that. So the grand hope of all the talking head pundits on propaganda financial TV is that this item is going to save them. Wow. And now moving to FNGS very quickly on popular stocks and Berkshire Hathaway. Covered gold early in the webinar extensively. Osman or whatever your name is there, sorry. Covered that early in the webinar and quite extensively showed the current wave counts and everything. Okay, this is going to be important. FNGS. So on FNGS, I've tried to simplify everything down just the nuts and bolts. And that is from the November 2022 low. It appears that it is trying to finish a 5-wave up structure. So this stock contains 10 of the highest flying stocks. Those stocks are evenly distributed. Fairly evenly distributed in this ETF. They consist of these stocks: CrowdStrike, Broadcom, ServiceNow, Meta, Apple, Amazon, Alphabet, NVIDIA, Netflix, and Microsoft. So yeah, that's pretty much the FANG group. And a fairly even spread between 9 and 10% in each. And what I think is going on here from November 2022 is we're getting a fairly clear Elliott Wave structure. 1, 2, 1, 2, 3, 4, 3, 4, and then this would be the fifth wave up from August, the August low. And notice that it is putting a 40-week cycle trough at that August low like it is in almost all the indices. I'm talking about the Hurst, and it's putting a 20-week cycle trough at this most recent low. And so this is very likely a 1 in blue, 2, 3, 4, and we get a fifth wave up here. So these stocks probably are going on as a group to make some more new highs, new all-time highs. Hurst thinks they're going to move up into early March. Almost everything else that I've shown you in the webinar is bullish from mid-January through mid-February. So this is very close. And there's a Fibonacci target zone between 63 and 70 that I think will be where we'll see the top. And then it is based on Hurst, bearish down into June of this year, next 18-month cycle trough, Hurst cycle trough, up into September, and then more downward movement all the way through February of 2007. So this is going to be important to watch because these stocks are the ones that have basically been in a rotation, a bubble rotation that has been keeping the stock market up, the overall stock market indices. Let's look at something that is really quite opposite, and that is Berkshire Hathaway. Berkshire Hathaway
is Warren Buffett and his people, and they only invest um, in companies that meet their criteria. And in recent times, they have been selling off a ton of the stock that they have owned for many years. And the reason, I'm quite certain, the reason for it is they believe that these stocks have moved up about a size they're going to move, and that they're overvalued, and that this happens sometimes, and they want to start building up their cash reserves so that they'll be ready to buy later on dips. One thing that you can say for sure about them is that they refuse, they don't sell easily. And it's probably because they know that tops are hard to call. Bottoms are much easier to call. From a sentiment standpoint and a Hurst cycle standpoint, bottoms are way easier to call than tops. And so that's a lot of times why someone like Buffett would buy and just hold and just wait. But he'd buy when they're cheap. And he often wouldn't buy a tonnage at the actual bottoms. He'd wait till they start building up a head of steam out of the lows. So he's not the world's greatest timer. He's just patient. And but from an Elliott wave standpoint, up from the March of 2020 low, this looks like a completed five-wave structure to the upside. Two, one, two, three, four, three, four. So that was in October 2022. And then one, two, three, four. That was in October of 2023. And then a fifth wave. Oh no. There we go. Then a fifth wave up. That was pretty relentless. It didn't want to give up. One, two, three, four, and then an ending expanding diagonal. It didn't peak until late November. And now looking to the downside into April. Question comes in for cycles. Do you put more weight on Sentient Trader or FSC? I can give you a clear and definite answer on that, Bob, and the answer is Sentient Trader. And the reason is I think that it helps a lot on the shorter cycles. So, but the 20-week, the 80-day, the 40-day, and the 20-week day. This is how a lot of times I've been able to make some of these calls um, on these shorter cycles. The FSC tool is very handy for, I think, looking for corroborating evidence on what cycle is dominant, for instance, but I do not find it as useful as I do Sentient Trader and Hurst's work. Another thing kind of pisses me off about the Foundation for the Study of Cycles is, they can try to be like act like what the foundation used to be, which was strictly an educational resource, but they're monetizing. It's a group of guys that are monetizing what they're doing. So in a way that, and admittedly, that's what I do too. I like to get paid for my work and my time, and I don't blame them for that. But to put all that under the cloak of the foundation is, I think, I don't know. That just rubs me the wrong way. Anyway, on Berkshire, Hurst is bearish through down into mid-April, and then bullish into August, and then it's bearish all the way through June of 2028. But this bounce,
Hurst pretty much nailed it. And it's going to be an aggressive bounce. It's probably going to challenge that all-time high that occurred back in November. Hurst currently thinks it'll only move up through February 8th, but I suspect, and it's been a pretty aggressive move to the upside so far, that it'll challenge that high. The only stock Berkshire's been buying lately has been Occidental Petroleum. That is a natural gas stock, and I like that. I like that stock, and I like why they're buying it because they think there's a depletion factor that, and if you'd like to read about that depletion factor on natural gas. It's been drill, baby, drill, frack, baby, frack for quite a long time now. And I would check out this website, gorozin.com. They don't pay me to show this. And look at their blog. And they have a really interesting article about how we're well past the peak on what we're ever going to be able to find and produce in the area of natural gas. And yet, because of cryptos and AI data centers, the demand for energy is skyrocketing, and companies are getting desperate on trying to find energy from anywhere they could find it. So you combine the demand, the heavy demand with the depletion factor on natural gas. It is bullish, and I think that's why Berkshire Hathaway has been buying Occidental Petroleum. And so that I think is going to be, and it's the only stock they've really been buying lately. And I already showed you, what I think is likely to happen on natural gas stocks moving forward. So Berkshire, I think, is a much more legitimate investment area. FANGs is kind of where retail traders will constantly be looking, and don't think this is quite peaked yet. So there's a number of individual stocks where I doubt they have quite peaked yet. I think the peak is coming in mid-February or late February. That would include Amazon, Disney, and several others. Um, Moving back to the document, what's left? Okay, our proprietary momentum algos. So I want to show you one particular algo that we well, it's been doing particularly well, and that's on XLE, large cap oil, and whoops, that's crude oil. By the way, very bullish on crude oil into May. Frankly, nat gas, not so much. But nat gas has been already screaming higher and kind of put in a little parabolic move here recently. So I like oil better than natural gas on the shorter term. I like them both on the longer haul. Um, but what I'm looking for is sectors. Yeah. If any of you have questions, I'm just about to finish with all the different items I wanted to show you today. And this last item is going to be more in the area of the automated trading. And here's the current daily signaling chart on XLE. We send out on a nightly basis screenshots of a couple dozen items. These would be futures contracts, the most popular ones, ETFs, some of the most popular ones, um, and um, and so
This is an automatic trading algorithm based on momentum. The big green blobs represent winning trades that have already happened or are currently underway. The dark red blobs are losing trades. Notice that the dark red blobs are all smaller, on quite a bit smaller on average than the average size of the green blobs. And the reason is because the way I developed these algos, and by the way, for a more in-depth explanation of the ultimate design behind these algos, please go to the last quarterly webinar that I did back in mid-October. I spent the entire webinar talking about all the nuts and bolts of here, and so I wanted to do something different this time that might be more interesting to you than repeating the same thing over and over again every quarter. But anyway, when the slope of the adaptive moving average is sloping to the upside, it turns green. And then if you are on a positive crossover on the wall, what I call the Walter Bressert, which is a double smooth RSI. If you're on a positive crossover of it and its moving average, which I back test for that moving average could be anywhere from a 3 SMA to a 25 SMA. In this particular case, it back tested best as a 4. And so if it's on a positive green crossover. So the green block happens when the Walter Bressert crosses above its moving average. The red block occurs when the Walter Bressert crosses below its moving average. So that's one aspect of the signal. The other aspect is the slope of the adaptive moving average, and that it has 3 different parameters, and I backtest for 2 of them. When those 2 agree, you'll get a buy signal, and it comes in like a green arrow. And it says buy at the open of the next day. Then if you start seeing these small red arrows, that it basically says start trailing the stop. And then if you get a red block like this that says exit the trade, or a green block that says exit trade. So this was a sell signal here. It never was stopped out. It got a duplicative sell signal again here. It stayed long until the Walter Bressert crossed over, and then it exited the trade. That was a beautiful hit, huge winner. Another winner here. You got the signal at the end of this candle. It went short at the open of the following candle, and it stayed short until it got this Walter Bressert crossover. It took profit. It went long here, stayed long until it got this red block here, and it took profit. Then the very next day, it continued higher, and it gave a new buy signal. It got long, and it's well into profit on that. So this algo has been making money on the down and the ups beautifully well. Now I have here's a screenshot of what it was doing before I did the back test and optimization, and that came in on January 1. So this was the final screenshot we sent of the algo on XLE last year. So this is on the last day of the year, and you can see that it went long here, took profit here, immediately went short and took all of that profit. Incredible. So the algo really works, and it works well over time. As a matter of fact, on XLE, oops, what did I do there? I'm going to put the strategy back on the chart. And now I'm going to edit this strategy. And I'll show you that the data, the range that it's back tested and optimized to is from January of 2022 through the end of 2024. So it's all of 2022, all of 2023, and all of 2024. These are all the parameters I test for, including the initial stop amount, and then if it starts, it says to start trailing the stop, how much that trailing stop should be worth. This assumes that you would buy $10,000 worth of shares or sell $10 worth of shares with a short when you get the signals. And so when I run the algo, the back test, it tells us that over the last 3 years, it traded 121 times. It had a 50% winning percentage, but the average winner was $258. The average loss was only 162. So what does the equity curve look like? Well, it was particularly profitable in 2022. It was also profitable in 2023 and 2024. But a lot of times you would look for maybe a better equity curve than that. And so for that, and we will put when we make our YouTube video of this and post it and make a blog out of this, we will present to you a file that you can download. It is an Excel file, an actual working Excel file that is populated with the actual back test statistics over the last 3 years after the current uh, back test and optimization on the algos. And you can sort it by return on investment percentage over the last 3 years. Or you can sort it by winning percentage, for instance. Now, I don't ever program my algos for winning percentage. If you program an algo to have and put together 95% winners, here's what you have to do. And those are out there in droves, and they're all the same. Their take profit is maybe 5 pips of take profit, but their stop size is maybe 100 pips stop. And so it's a terrible risk to reward. When I when I created these momentum algos, I wanted to create them so that they would trade as close to the way I want to trade as possible. And the way I like to trade is I don't like to day trade. I like to position trade. That's why I look so carefully at the weekly sentiment and the daily sentiment and the seasonality and the Hurst cycle analysis. When I go in long, for instance, on nat gas stocks, FCG, I want to be able to stay in that trade for at least a few weeks. And so if you're looking for winning percentage, one of the best algos looks like it was silver. Um, and silver has some pretty good stats. At one point, it had 8 consecutive wins, and at one point, it had 6 consecutive losses. Now, if you don't think you can sit through 6 consecutive losses, you could sort by consecutive losses. All of these, the most consecutive losses on any of these algos, or the fewest, was 4. And it's suggesting that the GDX, the miners, which at one point saw 6 consecutive winners and only 4 consecutive losers, it gained approximately 100%, trading $10,000 worth of shares at a time, both long and short. A 100% return over a 3-year period. Now, you could take those same signals and you could trade nugget and dust with them and get higher percentage results, theoretically 2 times that. And so I've just got asked about the miners, GDS, GDX. So I'm going to go to that very quickly, and then I'm going to close out things for this quarter, the quarterly premium plan webinar. If you have any other quick requests, throw them into the chat. I If it's something I can get to pretty quickly, I'll show it to you. GDX. So I already showed you on gold that I was expecting a pullback down into April, and then a rally into approximately August. Well, the GDX roadmap is very similar, and that is that up from this 4.5-year cycle trough low, and this was in October of 2023, that was an important low in almost every stock related item. October 2023, we got a 1 and a deep wave 2, and then we got a 3, and now we're in a wave 4. That wave 4 is probably going to last until April or to almost April. And then I think we're due a fifth wave. And many times fifth waves in precious metals items are rip-roaring affairs. So I think we've got a big rally coming. And the question is when to jump in there. This is where Hurst cycle analysis comes into play. Now, if you were a non-Hurst person, you were just Elliott Wave, you'd say, okay, I get you here. I'm the same. I got a 1 and a 2 and a 3, but this looks like 3 waves down here for a wave 4, so that must be the bottom. If you were Elliott Wave only, you would be, I guarantee you would be considering that this would be the bottom for wave 4. And the fifth wave has started, and we're moving to the upside. Well, I'll represent to you at this low right here. I did tell subscribers that to expect a rally. And the reason is because Hurst expected it, but it would be a shorter term rally. And that generally this wave 4 was going to last longer into, in this case, approximately late March, early April. And that it was, however, I didn't think we would, by the time we get to the end of the wave 4, we would be much lower than that. Because blue for invalidation is not very far away. It's down at 32, 35. And recently price got all the way down to 33, 35. And we're getting a nice rally off of here. But I don't think the correction is over. So A, B, and then 1, 2, 3, 4, 5, an ending diagonal to take us into late March. So no, I don't think this is the value of Hurst. I also have that corroborating evidence on gold and silver, expecting this correction is not over. No, so Bob asked if with Zillow bullish, I think real estate will be strong, and the answer is no, I don't. I think Zillow will just be one of those stocks that's a big winner in its sector. And be relatively isolated, and it'd be just one of the, like Jim Cramer says, there's always a bull market somewhere. I'm going to try to find it for you, and I think that's going to be a winning stock in a relatively weak sector. And I think that's that sort of thing we're going to have to deal with moving forward. It's these indices. I don't think they can continue this rotation around a handful of bubble stocks in order to keep it up. I think that's what's been going on. I think that whole methodology is long in the tooth and is about worn out. And if you're going to invest in individual stocks, you better make sure that you've got the weekly sentiment conditions in your favor and daily on that sector. and Hurst Cycle Analysis, and it's probably going to be relatively niche. Right now, I'm thinking energy. Uh, so there's the roadmap on GDX that matches uh, gold pretty well. Anybody else? Anything else that you would like for me to cover? I might stick around for a couple more minutes. Mike Pettis says Zillow profits from down markets with additional advertising. Yeah, Zillow has made some nice moves recently. They are highly active in the rental market space now. Um, so and they killed it on their last earnings announcement in the middle of a pretty bad real estate market. So it's just an example of a small cap that could do well. Do I think the entire small cap sector is going to be that everything's going to move up together? It's certainly not. Not with the long-term forecast that I still have uh, on the Dow and the S&P. Um, yeah, I could show you the S&P real quick. It's not much different than the Dow. You know, the Dow analysis is that we've reached three Fibonacci targets, and we're going to be in a bear market and through the end of this decade. And that's not going to be all of it. That would be in a grand super cycle wave 4 that could last decades. But I think that it's highly possible we'll have we'll rebound after the first leg into new all-time highs. And in other words, I think we're going to get a massive running triangle. This is going to damage severely the whole idea of dollar cost averaging into indexes. I don't think that methodology is going to work very well at all over the next few years, and people will be spinning their wheels and losing money, and it's not going to work. I think that in order to get serious about trading, they're going to have to get into the idea of finding sectors that are the most likely to move higher. Currently, I'm thinking it's energy, and so far so good out of that year-end low that we saw on XLE and FCG. Um, and there, I think those pockets of bullishness are going to rotate, but this does give you a general idea on the Dow of the bear market that's coming. And so the stocks that are going to be winners it's going to be very selective. But I think passive investing, forget about it. Got to get more real about now. If you're like me, you don't want to spend every second in front of the computer. I do that enough of that for my paying subscribers as it is. I work all day from the time I get out of bed till the time I go back to bed late at night on Saturdays and on Sundays. I also do most of that on Wednesdays and some on Fridays. And all of that is work that I do for subscribers. And that is a lot of time and work. And I've got a lot of experience with using all these tools. And I think it can be very helpful to you as a position investor and trader. But it's not going to be simple anymore with just straight up indexing. So there's the weekly chart on the S&P, looking for downward movement down into at least mid-April, and then a move up into August. I'm considering the possibility that by the time we get to August, we have one last new high there. And that's why I say this topping process that stock markets always exhibit um, For instance, in 2007, the price hovered for the entire I'm going to say from May all the way through late in the year at about the same level. In 2000, the price for the entire year, almost to three-quarters of the way through the year 2000, the market stayed up before it started moving higher. So this, I think, is a characteristic of market tops, is it doesn't just crash willy-nilly immediately. It's a topping process. I think we're going to be in that process until August. And I'm not counting out the possibility that we would get a new all-time high from there. Daily chart on the S&P, looking for this bounce to generally continue from mid-July through mid-February, like I've shown you on so many items, then move down into mid-April before we get a solid multi-month rebound, about 4 months of up. So there's going to be chances to buy. The next larger cycle, a chance to buy in stock markets, I think is going to be between late 2006 and the third quarter of 2028. So 2026 to 2028, I think there'll be a couple of years of up there. Anyway, that's everything. I am going to turn the video back on. Thanks for joining me for this quarterly webinar. I will plan to put the recording up on my blog and at YouTube. If I'm going to get back to that document real quick. Get back to that. Here we go. If you've never subscribed before and you'd like to give it a shot, send me an email. There it is, sid@elliottwaveplus.com. I already showed gold. You can go back and look at the recording of the webinar that we put up in a few weeks or in a few days. Showed gold extensively earlier. So you get a refund of 50%. I will do that manually. So you have to send me an email first. Send me an email. Say, hey, Sid, I wanted to subscribe to one of these plans. Would you give me that 50% refund immediately on the first month? And yes, I will. Thank you so much for joining. Have a great quarter moving forward. There's lots of potential trades that we're right on the cusp of those. One that comes to mind is a reversal of the U.S. dollar that would take us probably down on the U.S. dollar through mid-year. So look forward to seeing you as a subscriber. Thanks for tuning in, and we'll talk later. Bye-bye.